guys, this is MommyBelluga Investing.
Hi there, back again with me Ratih in MommyBelluga Investing. This time I'd like to give a little update on SGX or S68 with the stock symbol S68. Last year I discussed this company on my channel and my comments were, the first one was that the company had a really generous dividend distribution, solid performance over the last 10 years, and also, however, the share price was not that cheap. And now, after looking at the numbers, my quick take are, first, it is still a growing company through expanding to new markets and market acquisition. However, the fruit of their expansion hasn't been reflected in their earnings. And also, I'm rather concerned with their financial positions where there was surge of liabilities in the past few years. So all in all, I think I'll not adding any position in SGX, at least for now. Right, how did I get to that conclusion? Follow my analysis. For those who don't know, I compiled data from Yahoo Finance and company's annual report and posted the analysis in this channel. If that is your cup of tea, please consider to subscribe to my channel. Alright, disclaimer. Yes, this is an amateur video from my personal research for my personal use, not a recommendation to sell or buy shares in the stock market. Full disclaimer can be accessed in the description. Since our last review, SGX has added 3 new subsidiaries. They are BidFX, MaxTrader, and Scientific Beta. BidFX and MaxTrader provide services in the currency exchange areas. I'm not sure the differences between BidFX and MaxTrader here. From the final half-year report in 2022, SGX acquired MaxTrader MT trading platform business for around 204 million Singapore dollars. Among that, around $169 million were paid in cash. The next one is Scientific Beta. From my understanding, Scientific Beta seems to provide a way to rank different investment with respect to ESG or climate factor. This analysis capability, in my opinion, support products that offered climate impact X. Technically, Scientific Beta provided list of the companies that meet the criteria for sustainability. Then the list then passed up to Climate Impacts X, which then packaged as product to be used for ETF providers. As for the rest, unfortunately, I didn't have a chance to look into them, each of them, carefully. Probably I'll discuss them in my other updates in the future. Another update came from the listing rules. Now SGX allows for listing of Special Purposes Acquisition Company, or SPAC in short. From my understanding, SPAC is a kind of company that doesn't have any actual operation, but just a bunch of money. The main purpose of this company is to acquire another company, which by doing so makes the acquired company automatically listed in the stock exchange, hence skipping the IPO process. So that's the big updates that I can gather. Now let's take a look at SGX performance. As usual, I'll start with the earnings per share, the historical record of the earnings per share. Here I plot SGX earnings per share from 2014 up to 2022 as red dots or red rounds markers connected by a thick red line. I've placed a 0 marker with green dashed line to better visualize if the company is reporting profit or loss in that specific year. At a glance, we can still see that SGX is profitable, excluding the 2020 record revenue and profit. 2021 and 2022 SGX earnings per share are trending upward actually, which is good. However, from a different perspective, 2021 appeared to be a dip in SGX profitability. From the 2021 annual report, the 2021 dip is attributed to lower income from Treasury, together with increase in consolidated expenses. The lower Treasury income related to the low interest rate environment. While the latest financial statement for 2022 financial year also doesn't ring any alarm in terms of SGX profitability. However, I do feel some concerns after looking deeper into their financial. To do that, I'll add several more layers of information. Let's check it out. First one is SGX cash position from 2014 up to 2022. Here the cash positions revolve around 500 to 800 millions Singapore dollar. Next is their short-term liabilities or current liabilities. This is the liability or debt that SGX need to settle within 1 year or less. Here I plotted the current liabilities as purple bars. Yeah, here we see that for the last 8 years, their current liabilities were always higher than their current cash at hand. Also, the trend seems to be increasing. This situation makes me rather less comfortable, especially for 2022, where their current liabilities is double of their cash position. For completeness, here I plotted the long-term liabilities as the yellow bars on top of the current liabilities. The total height represents SGX total liabilities. We also can see that the long-term liabilities have been increasing significantly since 2020. 2022, 2022. For now that's about it. SGX cash versus short-term and long-term liabilities. Now let's take a look at my favorite, which is the dividends. To see the dividend payouts and its sensibility, so here I plotted 3 layers of information as usual. The first one is the dividend payout from 2008, which I plotted as red round markers connected by a thick red line, as we can see on the screen. On each of the points, I have annotated with 2 numbers. The numbers above the markers are the dividend payouts in Singapore dollars, and the ones below are the payout ratios to the respective year's earning per share. We can see in the chart on the screen that SGX only started to distribute dividend in 2014. As for the making of this video, it seems an SGX dividend payout dropped significantly from 2021 to 2022. However, SGX typically pay out their dividends 4 times in a year. So far, SGX have paid out dividend twice in 2022 and twice in 2022, and one more is coming in October. So the number we have here can be said only half of what we expect for 2022. I expect the total dividend payout after the final dividend for this year will be comparable to 2021, which is about 32 cents per share. In terms of dividend yield, SGX dividend yield have been driven lower and lower by the increase in its share price. Here I should put a note again, the low dividend yield for 2022 is not accurate, as so far only half of the dividend for 2022 have been issued. The final dividend I expect to be similar to 2021 if the share price doesn't increase too much. 3.2 dividend yield seems to be quite attractive for me. As a comparison, SSB 10 years interest rate for October 2022 issuance is 2.75%. So 3.2% is a rather good number. Okay, the next item on my list is the company's market valuation and what's the reasonable price for me. To see SGX market valuation, here I plotted 4 layers of information. They are: first, the price, which represents market valuation of the company. The second layer of information is the 10 times earning multiplier, which here I plotted as a dashed green line. 10 times earning multiplier can be considered as the price, where price to earning, that is the PE ratio, is 10. For me, as a general rule, I consider 10 times earning multiplier has 2 purposes. First, it indicates the price where I have higher chance to break even within 10 years. You could plot 5 times earning multiplier if your investment horizon is 5 years. Second, as a consequence for the first reason, I consider share price above 10 times earning multiplier to be expensive. The third layer of information is 15 times earning multiplier. With the same principle as 10 times earning multiplier, price above this indicator will be deemed as expensive, for me at least. Here I plotted the 15 times earning multiplier as a dash yellow line, just like the traffic light. The fourth layer of information is a 20 times earning multiplier. So here I plotted as a dashed red line. In general, I consider the share price to be expensive if the company share price crossed this line, the 20 times earning multiplier, the red dots on the screen. Alright, let's see what's going on with SGX stock price. As mentioned previously, SGX stock price has been continuously climbing since 2014, the general trend, yeah? The long-term trend showed that SGX share price is roughly supported by its 20 earnings multiplier. It went through a rally in mid-2020 till mid-2021 that it went way above 20 earnings multiplier. Currently, it seems to be on that similar path, but we are not sure it's going to reach a new height or it's going to be close to its 20 earnings multiply again. Based on its latest earning report, the current support is around 8.4 Singapore dollar, which is at its price at 20 earnings multiply. As of 16th of September 2022, when this video was prepared, SGX stock price was at 9.6 Singapore dollar. It's over its 20 earnings multiply. Let's do a bit of a calculation from a dividend perspective here, whether the price still makes sense for me. Let's assume that the total dividend for this year is similar to 2021, which is 0.32 Singapore dollar or 32 cents. With the current price, it will bring us, current price meaning 9.6 Singapore dollar per share, it will bring us to 3.33 dividend yield. It's a quite okay dividend yield if we compare to, for example, SSB October 2022. Which is at 2.75% for its 10 years period. However, it's not as good as, for example, if we compare to other stocks in the market. For example, DBS, which has around 4.2 of dividend yield this year. So, since my last SGX review, we as a family had made 3 long positions in SGX, given here with vertical dash red lines with green circle head. All of those positions were close to SGX 20 times earnings multiply. So for now, as I mentioned in the previous slide, we are not planning to add any more positions for SGX just yet. Okay, now let's wrap up. Conclusions. First, yes, I can see that it's still a growing company. It's still growing through expanding to new markets and market acquisition. However, the fruit of their expansion is not reflected in their earnings yet, but they have even surged in their liabilities lately. And that makes me rather concerned with their financial position. But give and take, it's probably for the good because they are making making a market acquisition and expansion. However, all in all, I think for now, as a family, we're not adding any more positions in SGX just yet. The dividend yield, on a note here, the dividend yield is rather interesting, 3.2%, around that, give and take. But for now, it's not as attractive if we compare to, for example, DBS. Alright, if you find this content to be informative or interesting, please consider to subscribe by clicking the subscribe or like button. I appreciate your input to improve this channel through the comment section. You can also access this channel in podcast version through AnchorFM, Spotify, Google Podcasts, Apple Podcasts, and other podcast platforms. Thanks for watching, and I'll see you again in my next video. Bye!